Broadcom just released a pretty cool chip that maybe Nvidia and Marvell investors might want to consider a threat. AMD was just at a conference today, and Credo Technologies was up nearly 15% after reporting some amazing earnings yesterday. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first let's start off with Broadcom. Broadcom is killing it. This company is about to report earnings in a few days from now, and we can see in the past 5 days the stock is up roughly 8.3%, kind of touching its 52-week high of $257.88. Remember, those are closing prices, so Broadcom is pretty much there right before earnings. Now, today the company did announce a Broadcom chip. Broadcom ships their Tomahawk 6, which is the world's first 102.4 terabytes per second switch. Now, just a quick reminder, Broadcom is normally known for kind of their ASIC solutions, which is kind of what they do, make AI chips for companies like Google. But their main bread and butter is the networking side. All these networking switches right now are usually Broadcom chips or Marvell technologies. Now, recently, we kind of had a new competitor in the networking side. We have Nvidia with the acquisition of Mellanox, and they have kind of Ethernet switches via the InfiniBand and the Spectrum X. So these types of solutions compete with that type of market, right? That Ethernet switch. So Broadcom doesn't make the actual chips themselves, but their partner used the chips that Broadcom makes to make those great amazing switches. All right, so let's look here at Broadcom at what the chip happened. This is my free semiconductor newsletter where I break things down a little bit easier for everybody to understand. So this type of chip, like I mentioned, is used to help make switches. And I think maybe we should start off with this point: Open Ethernet and open software. Broadcom champions scale up Ethernet. So it's kind of bringing this standard-based platform for this massive Ethernet explosion, or scale up Ethernet, which is crucial for AI clusters. So multiple partners like Arista, Juniper, Nokia, and more are already building new switches around the Tomahawk 6. Now, this is a potential InfiniBand disruption. By offering higher bandwidth on Ethernet, Tomahawk 6 challenges Nvidia's InfiniBand in large-scale AI deployment. Now, Bloomberg does mention that the Tomahawk 6 gives hyperscaler an open standard base fabric, free of proprietary lock-in. So I think if one was looking at a competitor and who this chip really affects, like I mentioned, it's more likely Nvidia's networking side, but Nvidia also has a roadmap where they are developing new switches and new chips to improve their overall switch solution. So Broadcom pretty much coming in here full swing ahead right before earnings. And if I didn't mention the scale out, this chip can help scale up 512 XPUs in one hop, or in 2 tiers, you can scale up to over 100,000 accelerators. And this is significantly reducing AI cluster complexity, which is crucial because you're reducing the amount of wires and other types of connections you might need when scaling out to something this big. And when you save power in one place, it allows you to make more and more, use that power in other solutions like GPUs or some other types of ASIC solutions or XPUs. So this one was pretty cool. I mean, Broadcom is definitely a leader here in the networking 6. The Tomahawk, I believe, is going to be another massive revenue grower for them. Here's just a quick look, and I'm here on finchat.io. But we can see this is Broadcom's overall quarterly revenue. It has seen some massive growth since this AI market has started. We do have earnings coming up in a few days, and we are expecting maybe not much growth this quarter, but regardless, Broadcom is definitely kind of a nice player here. So I wouldn't say I'm worried as an Nvidia investor, But there is that competition for Nvidia now in their Spectrum X and their Infinite Band, which are both kind of some form of networking solutions for the AI cluster world, or this kind of AI data center world. Next, we're going to take a closer look at AMD. So AMD was up roughly 2% today. I think actually most of the market was pretty good. We can see Nvidia was up 2%, Broadcom was up 3% on the day. Even Intel was up roughly 2%. So AMD pretty much had a great day as well with the overall market, but more importantly, AMD had an AI a conference event with Bank of America. So AMD's leaders Jean Hu, which is the CFO and the head of relations, both took the stage at a Bank of America Global Technology Conference on June 3rd of 2025. They highlighted how new data center GPUs like the MI350 are propelling AMD's growth, while tariffs and export restrictions create short-term headwinds. So throughout this overall conference, we did hear a lot of the same things that we heard during earnings. Nothing too new. One thing that really got me excited though is we do have AMD's AI events coming in pretty much 9 days from now. Maybe 8 if you're it's already the end of the day here, so about 8 days from now, and I'm pretty excited about that, especially since management and here in this conference they continue to talk really strongly about the MI350, as they expect a strong second half driven by the launch of the MI350, and they are getting a lot of great traction from new customers and existing customers of the MI300 series. They also talked about kind of scaling with systems, how the CT acquisition is helping them kind of create this rack scale solution, which will eventually let them do massive sales of GPUs, DPUs, and CPUs. So that could be massive growth potential for their overall products if they really start scaling into these massive systems. Some other things that they mentioned were the gross margins outlook. While data center GPUs generally have lower margins than enterprise CPUs, the CFO forecasts that modest growth margin improvement in the second half due to the rising demand for AMD server processors and the high margin embedded segment. So even though you might see that kind of pushback and tailwind from maybe the AI accelerators, the rest of the market can provide some nice tailwind and offset some of that issue. The company also gave us some macro uncertainty. Management struck a cautious note on tariff, export rules, and potential PC inventory pull-ins, maintaining a conservative outlook for the second half. Despite AMD does see some potential upside in all the markets from the CPU, the kind of embedded, and the AI accelerator space. And again, I'm super excited for AMD's AI event, which will be happening in a little bit over a week. Now, if you do want to check out AMD's kind of presentation, make sure to go to finchat.io. They have all the transcripts. And if you want free 2 weeks, make sure to use my special offer at finchat.io/Jose. You don't even need to put in a credit card to sign up. Also, if you want to support the channel a little bit more, make sure to subscribe, hit the thumbs up, as I am trying to hit 75,000 subs. And if you want a free newsletter, as we're seeing here, What the Chip Happened provides a lot of great news for the semiconductor space. Now, I was hoping to cover so much more on today's episode. We had Navitas that also had a conference. Unfortunately, I couldn't cover it. I might cover that tomorrow. Meta Platforms had a nuclear deal with Constellation Energy. I did an episode on that before, so if you want to check that out. And TSMC had a lot to say in a recent conference as well. So those are 3 that I missed, but again, I'm already providing such great information. You're not going to find this type of information daily anywhere else. Now, the final stock I want to take a closer look at is Credo Technologies, ticker CRDO. The stock is up roughly 15% on the day. Year to date, the stock is pretty much flat, even with those returns. It's crazy though. But if you were to purchase on those April highs, you would have been up over 115%. So Credo Technologies reported earnings yesterday. And for those that are not familiar, they are an innovator in providing secure, high-speed connectivity solutions that deliver improved reliability and energy efficiencies as data rates and corresponding bandwidth requirements increase throughout the data center infrastructure market today. So for those that are not familiar, Credo Technologies, they create some of these networking solutions that help to kind of communicate AI GPUs in a different way from what we saw from Broadcom. There's so many ways that you can do kind of these communication a whole different way, and obviously they're benefiting from this. If we kind of look at it, Credo reported its quarter four earnings on June 2nd, delivering blowout results driven by massive demand for its high-speed connectivity. Revenue skyrocketed, so quarter four sales hit $170 million, up 180%. Fiscal year 2025 revenue topped $437 million, up 126%. So here again in FinChat.io, we can kind of see these pretty cool graphs. We can see the AI story for Credo is kind of starting right now. Remember, we did see about $437 million in revenue. The company already has a market cap of roughly $12.2 billion. So there is a lot of growth expected for this company, in my opinion, some valuation. As we're going to see, that's probably one of my biggest pet peeves at the moment with this. And also, I can't have every single AI company. So those that have owned this one and own it, congratulations. I mean, the company does have some amazing margins. Non-GAAP gross margins climbed to 67.4%, driven by scale efficiencies and obviously the record-breaking revenue because of the AI market. Now, they have one of their main products is AECs, which is active electric cables, which remain the star of the show, connecting AI clusters more reliably and efficiently than traditional optical links. We saw Nvidia kind of transition to kind of these AECs pretty much with the GB200, I believe, and the NVL72, as optics were taking too much power and they were pretty expensive and reducing. And so we kind of saw that transition where if you can save energy elsewhere, you can put more GPUs, and the AECs market were there. The company also gave some optical upside there as well. They believe that there is opportunity in next-gen optical transceivers, the SPs. They also gave strong guidance for the quarter one of fiscal year. They expect about $195 million. Assume a $200 million run rate for the next 4 quarters. That's about a $800 million revenue company. Again, this company at a $12 billion is priced into somewhat perfection right now, but there is definitely massive growth opportunity as we're seeing AI is just getting started. In forms of risk and tariffs policy changes remain fluid, but Credo has diversified manufacturing across multiple geographies to mitigate exposures, and customer concentration is easing, yet still worth monitoring as large hyperscalers ramp quickly. We will see 3 hyperscalers each contributed over 10% of sales, highlighting Credo's expanding customer base. But still, at the end of the day, you're usually going to see maybe a very small concentrated base of customers, because in the AI space and the hyperscale space, there's not really a lot of players. So we did see kind of that revenue jump up dramatically for Credo throughout these past 2 quarters. We do expect maybe strong year-over-year growth, but 185 million at midpoint is only about kind of closer to a 10% sequential growth. So quarter over quarter, there is some slowdowns. There's not much growth, but that's what we're seeing in the AI space. Now, margins, like we saw, 67% margins, gross profit margins is pretty strong. And this is something that they've been able to actually maintain for the past few quarters here. So Credo Technologies, my biggest pet peeve here is just valuations, just because I own a lot of other companies in the AI space. Maybe if this was the only one I wanted, it might feel a little bit different, but next trailing 12 months PE ratio is 48.7. I think that's actually pretty expensive, because I can pay a lot of other more companies at a cheaper valuation. But at the same time, this is nearly $10 billion and a lot of growth potential. So this could be a multi-bagger, but you're paying a lot for the growth right now. So I hope you guys enjoyed today's episode. Again, we covered 3 different companies, a lot of different topics here. Take care. See you next time, and peace out.